Today, Bitcoin reclaims $104,000 to end the week. A federal judge denies the SEC and Ripple's request to settle their case for $50 million. And Coinbase's chief legal officer Paul Grewal discusses this week's data breach from Consensus. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices mixed to cap off the week, with Bitcoin trading above $104,000 as of noon. Ether was up more than 1%, just under $2,600, and XRP dipped more than 2% after a federal judge denied Ripple and the SEC's request to settle their case for $50 million. We'll have more on that in just a bit, but first, let's take a look at how the major cryptocurrencies performed for the week. As of noon, Bitcoin is up 1% for the week, on pace for its fifth straight weekly gain for the first time since October 2023. Ether soared more than 11.5% for the week, on pace for its fifth straight weekly gain for the first time since December 2024. And XRP is up 3% and on track for its fifth up week in a row. Taking a look at Galaxy Digital, which direct listed on the Nasdaq this morning, shares opened at $23.50. By noon, they were trading at $24.56. Galaxy executives rang the opening bell at the Nasdaq this morning. Galaxy founder and CEO Michael Novogratz was there and in a CNBC exclusive interview discussed the company's debut. He also weighed in on crypto prices, offering his price forecast for Bitcoin.
We had a euphoric top right around the inauguration, and a combination of a lot of things, Trump coin and whatnot. People say, okay, and crypto went back and tested where the election breakout was. Now it looks like we'll take out 106, 107, 108 and make the next leg to 130, 150. And at that point, you're in price discovery, right? I keep thinking gold's a $22 trillion asset and crypto's a $2 trillion asset. And at one point, as more and more young people inherit the money for their old people that, kiss the face of God, you're going to see crypto equal gold. And that's a long way from here.
Okay, back to Ripple and the SEC as we take a look at the top stories. A federal judge denied the request to settle the case for $50 million, with Judge Annalisa Torres ruling that it falls outside her purview as the case is currently undergoing an appeals process. Per the filing, she also said if the case is restored under her jurisdiction, the court would still deny the motion, calling it procedurally improper. Following the ruling, Ripple's chief legal officer, Stuart Alderoty, took to X, arguing that the order does not change what he calls Ripple's wins, and reinforced Ripple and the SEC's agreement to resolve the case. In March, Alderoty said Ripple would pay $50 million out of the $125 million fine originally imposed on the firm as part of an agreement to wrap the case. Ripple was embroiled in a years-long legal battle with the SEC. The agency charged the firm in late 2020, alleging that it and two executives, including CEO Brad Garlinghouse, raised more than $1.3 billion through an unregistered digital asset securities offering. Next, FTX creditors will start getting more than $5 billion in distributions in exactly 2 weeks, all part of the defunct crypto exchange's recovery plan. This is part of the second phase of FTX's court-approved recovery plan. The FTX Recovery Trust said yesterday that recoveries range from 54% to 120% of their original claims based on the value at the time of the crypto exchange's collapse back in 2022. Crypto firms BitGo and Kraken, two custodians overseeing the distribution process, are expected to begin transferring funds within 1 to 3 business days from the start date of May 30th. In a statement, John Ray, who took over as FTX CEO following the company's bankruptcy, said the scope and magnitude of the FTX creditor base makes this an unprecedented distribution process, and that the announcement reflects the outstanding success of the recovery and coordination efforts. Finally, Coinbase confirmed yesterday that the SEC has been investigating whether the crypto exchange misstated its user numbers. The inquiry focuses on the number of verified users reported by the crypto firm, which Coinbase has claimed is more than 100 million in various securities filings and marketing materials, per the New York Times, which first reported the story. The investigation started during the Biden administration, which famously was hostile toward the crypto industry, and has continued under the Trump administration's more crypto-friendly SEC. In a statement shared with CNBC, Coinbase's chief legal officer Paul Grewal called the probe a, quote, holdover investigation from the prior administration about a metric the company stopped reporting 2.5 years ago, which was fully disclosed to the public. He went on to say that the company explained that the verified users metric includes anyone who verified their email address or phone number with the firm, so it may overstate the number of unique customers. Grewal also said that the company does not think the investigation should continue. Coinbase shares were already under pressure after the crypto exchange disclosed that hackers stole customer information and were demanding a $20 million ransom. Coinbase estimated that the incident could cost the firm up to $400 million to fix. As of noon today, Coinbase erased all of yesterday's losses, trading higher by more than 9.5%. Now, before the news about the Coinbase SEC investigation broke yesterday, Crypto World's Mackenzie Sigalo sat down with Grewal at one of the industry's biggest conferences, Consensus 2025. The two discussed crypto regulation in the US and that recent hack that could cost the crypto exchange hundreds of millions to correct.
I feel like so much of 2024, you spent time on the campaign trail, in a sense, educating lawmakers, but also educating voters about the industry. And we saw so much of the crypto voting bloc become a big part of the conversation. To that end, Coinbase was a very big player in terms of electing pro-crypto lawmakers up and down the ballot, across the country, across the aisle. And I mean, we certainly saw that play out in the election. A lot of pro-crypto lawmakers now on Capitol Hill. The first bill to test this new Congress was the stablecoin legislation, the Genius Act in particular, that hit a road bump last week. They're looking to revise the legislation to appease what the concerns were. There might be a vote as early as today, but talk to me. I mean, Coinbase invested so much time and effort and resources into making sure we had this pro-crypto Congress. How are you feeling about this first roadblock on Capitol Hill?
All things considered, Mackenzie, we're feeling pretty good. Look, if 2024 was a year of education and ultimately elections, 2025 is going to be a year of regulation and legislation. And you know, with the most pro-crypto Congress ever elected in history, together with what I think we can all agree is the most pro-crypto presidential administration in history, I'm feeling very optimistic that the stablecoin bill in particular will move forward. You're right, there have been certain procedural roadblocks that we've confronted in the last several days, but the consensus is clearly there. Democrats and Republicans alike agree. We need sensible rules for stablecoins. We need to pass the legislation now, and we need to stop monkeying around in the U.S. while the rest of the world races ahead.
Are you talking to lawmakers now to help them navigate next steps to edit this bill to get it into a shape where it appeals to both sides?
We have. We have been in extensive discussions with lawmakers on both sides and in both houses. We're obviously focused right now on the Senate because that's where the action is on stablecoins. But we're optimistic that the differences that have emerged are not insurmountable and that there is a consensus that compromise and solutions are going to be required here. And so that's why I think we're going to see the bill move forward.
Now, some senators have cited issues with certain regulations around AML, but others have cited concerns about the president's potential conflicts of interest. Do you think that that's something that is a part of what's holding up this legislation?
Well, you know what's really interesting is that different legislators do have different priorities. So you're right. For some, the issue has been AML restrictions and the like, and for others, there have been questions raised about the ability of not just the president, but other elected officials to engage directly in certain types of crypto projects. I think the senators, the Congress people, ultimately the White House, they're going to sort all that out. What I'm most confident and frankly encouraged by is they're having a conversation. The fact, Mackenzie, that we're even talking about a conversation and a dialogue now between Democrats and Republicans speaks volumes about how far we've come from just a short while ago.
Now, Coinbase, of course, has close ties to Circle and the USDC stablecoin in particular. Once we see this legislation passed into law, we're going to see a lot of players flood the market. And so a very oversaturated US dollar pegged stablecoin field potentially coming up very soon. What do you think of that and all the competition that's about to be introduced?
Well, I think all that competition is all the more reason why we need to see stablecoin legislation passed now. The fact of the matter is that the vast majority of fiat-backed stablecoins globally are backed by US dollars. And that fact and the implications of that fact appeals to both Democrats and Republicans alike. It provides the US with a unique opportunity to extend its influence into parts of the global economy that it might not otherwise touch. I do think that means competition for USDC, competition for Tether, competition for other coins that are prominent in this market, but competition is a good thing. And I think the market as a whole is going to grow dramatically as a result of the stability and certainty that legislation will bring.
Paul, I feel like so much of your job for a period of time was focused on battling the SEC and then the 2024 election cycle. What are you doing with all this free time?
Well, spending it wisely, but spending it very differently than maybe a short while ago. The fact is that we have a very productive working relationship now with the SEC on a whole range of issues. I, for one, am thrilled to see Chair Paul Atkins jump into the issues affecting and implicating crypto with both feet. And of course, he's leveraging the great support and the leadership shown by Commissioner Ueda, Commissioner Hester Peirce, in particular, in standing up a task force that was working from day one of the new administration to get information to the SEC that it needed in order to effectively regulate this market. It's a very different posture than being in court and arguing over decades-old Supreme Court precedents. This is a much more productive way to get to the right balance between protecting investors, as always, and promoting innovation.
On day 4 of the job, Paul Atkins was convening one of the crypto roundtables. I met him during that event, but he hosted a second crypto roundtable earlier this week. What kinds of conversations are you having either with the chairman or other members, other commissioners?
Well, what the commissioners as a whole are making very clear is they not only welcome and tolerate input from the industry and other stakeholders who may be more critical of crypto, but they need it. They have to have it. And so that's why we've seen these roundtables convene so quickly. And the roundtables bring together such a diverse array of voices on these crypto topics, whether it's how to define what securities transactions really are that fall within the jurisdiction of the SEC, how to think about managing conflicts of interest and other issues that are implicated by the unique structure of the crypto market, and also, of course, ultimately tokenizing equities, which is another promising innovation that we think will come to the U.S. market in short order. So all of this reflects, I think, a real consensus among the commissioners that conversation and dialogue is the answer. The days of lawsuits and endless litigation hopefully are behind us.
I certainly feel that we've seen probably the most change out of the SEC since we've seen this turnover in the administration, the rollback of SAB 121, and other moves that have been made, which have really opened up what it's possible for banks to do. To your point about potentially tokenizing public securities and that being in short order, what needs to happen? Is that the crypto market infrastructure bill? We need lawmakers to pass something to that effect, or is it really just regulation changes at the SEC that could pave the way for that?
Well, beyond passing the stablecoin bill, there is no single greater impact that the SEC and the CFTC will be able to make on the development and growth of this market than legislation being passed on market structure that will empower them to do just that. Legislation is the answer. We need to see a market structure bill come quickly on the heels of stablecoin legislation. And I think with the two of them together, we will see innovation unleashed and clarity being brought to how to think about this very complicated market in a very simple and practical way.
The data breach, can you address that?
Well, earlier today, Brian Armstrong, our CEO, put out a video explaining that over the weekend we were the victim and the subject of a $20 million extortion demand by threat actors who appear to have bribed several Coinbase employees and or contractors into sharing customer information so that they could socially engineer those customers into moving funds off of our platform. No passwords were shared, no private keys. This was not an instance where funds were taken from Coinbase, but information about certain customers, less than 1% of our monthly transacting users, was affected. Brian was very clear. We say no to this extortion demand. Brian was equally clear that we're going to do right by our customers who may have been impacted. And we lay out all the details of how we intend to reimburse affected customers on our blog and on our website. But this is unfortunately a reality for many global firms operating, and I think many global firms all have to make their own choice about how to respond. For Coinbase, the choice was clear. We will not pay this ransom, and we will do right by our customers.
Okay, that's all for Crypto World today, but we'll have more conversations from Consensus on Monday. We'll see you then.